I have a simple filter I use to avoid bad trades and exit early when things change. Looks basic, but it works. This week, it saved me twice. This is the higher timeframe confirmation. Hi everyone, I'm Val, and this is how I avoid unnecessary losses and protect profits. Let me show you. This is Thursday, June 5th, 2025, Nasdaq 1-minute chart. I almost took this trade, but I didn't. This trade idea was 102.75 points to target. Target was previous day low. It had a 31 points risk and a 3.31 risk-reward ratio. At this point, this short idea looked solid to me. Price had tapped the consequent encroachment of this daily FVG. It also had swept buy-side liquidity at this level, which is the previous month high. Then price traded down here with displacement, retraces back into this breaker block, respected it, then traded back and forth a little bit around this area, which is the new day opening up of June 4th. But I usually don't take trades before 10 a.m. because I prefer to wait for the 1 hour and 4-hour candles to close, because this is what it gives me the higher timeframe confirmation. So now, let's see what this filter was telling me in this case and why I ended up avoiding this trade. Okay, here we have the 1 hour and the 4-hour timeframes. I've highlighted the candles that closed at 10 a.m. This is the 9 a.m. 1-hour candle, and this is the 6 a.m. 4-hour candle. Now, the 1-hour chart showed a clear sell-side liquidity sweep here. And when that happens, I don't expect price to go much lower. I prefer to look for long setups in cases like this. That alone was enough to keep me out of this trade. But I always look for alignment between both timeframes before entering a trade. And the 4-hour timeframe here is showing that there was sell-side liquidity sweep, but also buy-side liquidity sweep. So it didn't give me a clear directional bias. To me, it looked 50-50 at this point. And with no strong confirmation either way, I decided to stay flat. In fact, I didn't take any trades on Nasdaq that day, but I did take one on gold, but that's not the focus of this video. If you're interested in gold setups though, drop a comment and let me know. I can make more videos on that. Alright, now let's jump into the market replay on TradingView and see how this played out in real time. Okay, here's another example. It was on Friday, June 6, 2025, Nasdaq 1-minute chart. In this case, I took this trade, but thanks to my higher timeframe filter, I was able to exit early the position and still make a profit. The trade idea was to go long with 70 points to target, aiming for the daily FVG high with just 12.5 points risk with a 5.6 risk-reward ratio. It was a strong setup, in my opinion. The only thing that made it less than an A+ setup was that I was entering in premium. I knew that, but the low risk the position had and the chance of price reaching the target with all this liquidity resting above, like the previous day high and this area, which is the 50% of a daily premium week, all this gave me the confidence to take it. Here at 8:30, we had high impact news, price rallied up, then consolidated for a while in this area, forming a 15-minute order block. Then price continued higher and always holding above the 50% of this order block. There was another key level for me at this point, which is this level that I marked with an orange line. I thought that if price broke below this level with candles bodies, I would have considered a change in the state of delivery, but it didn't happen. Price held perfectly, always with bodies to the tick. Look at this area. For me, this was a clear bullish sign. Then we have the formation of the first presented fair value gap, New York AM session. After that, price continued higher and retraces back to this area multiple times. At 10 a.m., I checked how the candles closed on the 1 hour and 4 hour charts, and to me, they were continuation candles. I was expecting a bit of manipulation to the downside before price continued higher here, so I waited for that before entering. But now let's look at what happened next and how the higher time frame filter helped me exit safely and with profit. Okay, here on the higher time frames, we can see the 10 a.m. candle. It was an inside candle. It didn't take buy side or sell side liquidity. So for me, it didn't give much information. But what did matter was what happened around 11 a.m. during the macro time, between 10:50 and 11:10. Price clearly took buy side liquidity. You can see it on the 1 hour and also on the 4 hour. And then it came back into the range. That was a bearish sign to me. At the same time, there were inefficiencies below, in this area, that hadn't been filled yet. So I figured this trade doesn't look high probability anymore. I decided to close the position at this level. Let's see. If you're interested in the indicator I'm using for higher time frame candle analysis, I'll leave it in the description below. Thanks for watching! If you find this video helpful, hit the like button and subscribe for more content like this. See you in the next one!